everyone, and welcome back to your favorite web show based on your love of, finance, news, and comedy. Oh my gosh, it's in the same place. It's This Week Today. I'm your host, Chase Majerus, and as you can see, we have returned to the studio, not my apartment, and it smells a lot nicer in here, that's for sure. Anyway, our first story of the week involves Ellie Mae, just a small software company that helps automate the processing and closing of, millions of home loans. Also, they're based in basically the same area where I grew up, in Pleasanton, California. Shouts out P-Town! Intercontinental Exchange Inc., the owner of the New York Stock Exchange, said it would acquire Ellie Mae. And this is a big deal because this big deal between ICE, that's what they're called, and private equity firm that owned Ellie Mae, Thoma Bravo, is valued at about $11 billion, including $9.25 billion in newly issued debt and $1.75 billion in stock. That's such a big number. By the way, this deal is supposed to close in the third or fourth quarter of 2020. So why is Ellie Mae worth so much money? Especially because last year, Thoma Bravo, they acquired Ellie Mae for $3.7 billion in cash. By the way, who's got that just sitting in cash? $11 billion! I mean, with that absurd amount of money, you could buy a local football team, the 49ers, 3.5 times. My God. Ellie Mae's revenue has grown rapidly since the acquisition last year, in part by the coronavirus pandemic, effectively accelerating the use of its digital tools. Yay, digital media, woohoo, welcome to the 21st century, again. And executives at ICE are forecasting strong tailwinds for the next decade towards substantial growth at Ellie Mae. ICE chairman and chief executive Jeffrey Sprecher, that's a bit of a tongue twister, even said ICE would also profit from the transaction by amassing a huge trove of mortgage data, which it would sell alongside the financial data that it already sells from ICE's markets. And, quote, he said this, "We will be the de facto source of information in the U.S. mortgage market." That's a mic drop, yo. Gosh, there's so much ICE in here, you would think that it's a Migos music video. Oh. Or an article about Shia LaBeouf and X-Men because they want him to be Iceman. Oh. Okay, so we got Ellie Mae, we got Fannie Mae, we got Freddie Mac, we got Freddie Ellie Belly Benelli Melly. Just kidding. Mortgage giants Fannie Mae and Freddie Mac just announced that they are raising fees for lenders on all mortgage refinances. That's a bad idea, I think. The change is designed to shield the two from additional risk brought on by the coronavirus pandemic. Okay, that makes sense. The price adjustment adds 0.5% of the loan amount to the consumer's cost, and it amounts to about $1,400 on the average mortgage originated today. That doesn't sound very great. And it begins in September, which is just in time for my yearly 2 entree birthday dinner. That's right, instead of always saying, oh man, I want this thing or I want that thing, I get both of them because it's my birthday. Like, why would I choose one of those things? Happy birthday to me next month. But anyway, this refi price adjustment has been met with strong criticism. The looming concern here is whether the move was done because the FHFA is truly worried that Fannie and Freddie could face huge losses when the mortgage bailout programs end, or is it really just a roundabout way for the Treasury Department to create a windfall for itself on the back of mortgage companies, and more importantly, consumers?